What's up everybody? Welcome to the Stocks channel. My name is Corey and today starts the week of the Santa Claus Rally and we definitely see Santa Claus is a bull. We're breaking out to brand new all-time highs in the S&P 500 and rallying across the board. So first up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today on SPY we had a very bullish day, going up 1.42% and closing right on top of our price target right around 477.3. You can see we close on that number to the penny, and you can go back and look at previous episodes and you can see that has been a price target I've had for multiple weeks now. So we are officially here at the price target, which means anything is possible from here. Remember, I always tell you to take on risk and get greedy when everybody is fearful, and then reduce risk when everybody is getting greedy. And right now we're at all-time highs, and now is the time to start locking in those profits and getting ready to buy the next dip. If you're sitting there thinking, why would we possibly be selling already? Then you probably weren't buying way down here because you should be well in the profits and ready to lock some of that in. Right now is the time for short squeezes, and plenty of short sellers will regret shorting this market, and they will start exiting like we did see today. So sometimes when you get these Santa Claus rallies, you need to be mindful that it's going to be on a very low volume melt up, which means from here, even though we could continue to go higher, we always have to be on the lookout for high volume selling. So while this is a very strong bull market and we don't want to try to call a top, we don't want to be reckless, and we definitely want to start locking in some of those profits. We can clearly see SPY is back into the full bull trend, and we can clearly see there's separation in the moving averages, which means this bull market is picking up momentum. So don't rule out the possibility we do blast through this resistance level and get to that next price target up there at 483. If you've been following along on my price targets, this was one of those price targets we've been waiting for at SPY 477, so we still need to respect that level and not look too far ahead. What I mean by that is don't just assume SPY has to go to 483. We need to start seeing price action breaking through this resistance level. So if we do start pulling back from here, we will want to see a couple of critical support levels holding up, and those levels will be at SPY levels of 470, the gap close at 467, and our 20 simple moving average at 464. We have plenty of support below those levels, but those will be the most critical levels to maintain this bull trend. We don't have to hold on to the daily bull trend, but now that we have it, we want to see SPY staying above the 20 simple moving average, which is at 464. So don't just sit down here and look at the volume and go, this is a low volume rally and it can't be trusted, because if you're doing that, you've already missed the majority of the move. We've gone from low volume buying all the way back down since December 20th, and we're back to new all-time highs on low volume. So if you're strictly looking at volume, you just missed a 5% move because you're focusing on the wrong thing. High volume selling is way more important than high volume buying, because the bulls take the stairs up and the bears take the elevator down. I'm completely fine with the stock market taking the stairs up if it continues to go higher on low volume. Price action tells us it's still bullish whether it has high volume or not. So watch those critical support levels and look for that critical breakout above 477 to possibly get to the next price target at 483. As long as we have the bull trend, you still want to look at higher price targets and stay bullish. Jumping over to the NASDAQ 100 triple Qs, we could see the triple Qs were up 1.65% today and clearly blasted through that resistance level at $400. As you can tell, the triple Qs are not yet at a brand new all-time high, and the previous closing all-time high for the triple Qs was right around $404. So look for resistance just a little bit higher than where we closed today at 404, and if we can decisively break out above that level, you're looking for price targets at 410 and 415. You can see the triple Qs now have the full bull trend on the daily chart once more, and we will have strong support that we need to watch to the downside at 400, the breakout level at 398, and the full gap close at 397. We have another breakout level right around 394, and the 20 simple moving average is at 392, and we will want to see the triple Q staying above that 20 simple moving average at 392 to maintain the bull trend. So this clearly looks like another bull rally is beginning in the triple Qs, but we still want to be mindful at these price targets that we could see another pullback that could always lead to a correction. So watch those critical levels at 404 and 410, and above that we're looking for 415. On the Dow Jones, we were up about 1% today, and we see the Dow Jones is getting a bullish breakout look with that close back above 361, closing well above that level right around 363. So the Dow Jones is very close to regaining that full bull trend once that 20 simple moving average crosses back above the 50 EMA, and we can clearly see the indices are looking bullish across the board. The Dow Jones will get another brand new all-time high on a close and breakout back above 365, with our price target all the way up there around 372. Critical downside support will be this breakout level at 361, and then we still have strong support right around 359 and the full gap close at 357, and the strongest support level will be down here right around 355. Watch all of the indices as a whole because right now they're looking bullish across the board, so as long as we maintain bullish indices, we should continue to climb higher, even though it will be on that low volume melt up mode since we are in the Santa Claus Rally. On the Russell 2000, we were up just under 1% today, and the Russell 2000 did close back above the 50 EMA, which was a critical resistance level. So with the Russell 2000 back above 224, we're looking for resistance right around 227 and the full gap close just above 228. If we can close that gap and continue to climb higher, we're looking for strong resistance right around 231.5 and 234. If the Russell 2000 can get back into the 230s and start breaking out, we could be starting another bull rally that could take the Russell 2000 to new all-time highs. We can't know the Russell 2000 is bullish though until we get back above at least 232 and then see that decisive breakout above 234. To the downside, you're looking for strong support right around 222 and the breakout level right around 219. And as long as the Russell 2000 can stay above 219, it's still possible we close that gap and test resistance in the 230s. On the ARKK ETF, we were down 1.68% today, so it doesn't look like Santa Claus is coming to visit Cathie Wood. We clearly see we're still in the strong bear trend, and we clearly see we're getting rejected at resistance, so there's still the possibility ARKK is coming back down to support at 94 or 90. If we break down below 90, you're looking for strong support at 85 and 81, and we really need to break out back above 107 to start looking like we could be going into a bull cycle. So right now, ARKK is still looking bearish, and we need the price action and the trend to start looking bullish before we can say that this is bullish. You don't just want to assume that because it's gone so low that it can't go any lower. That would be a rookie mistake, and we know that's just not the case. We could still see ARKK going back down to 90 and possibly into the 80s. On the VIX, we were down just over 1.4% today, and we continue to see the VIX getting crushed with the VIX now trading below 18. So as I continue to tell you, the VIX below 20 was a bullish breakdown, and that means if the VIX is heading lower, we expect the stock market to head higher. That's exactly what we're seeing, and it looks like the VIX is coming back down towards support at 15. So right now, as long as the VIX is below 20, you need to stay on the bull, and if the VIX starts breaking out back above 20, you can start getting a lot more cautious. With the full-blown stock market correction that's likely coming, will be on a VIX breakout above 25. On Bitcoin, we're currently up 0.82%, and we see Bitcoin is trading above 51,000. We did get that strong bounce off of that support level at 46,000, but we need the bullish breakout on a close back above 53,000. So we can't get overly bullish on Bitcoin just yet because we haven't had the bullish breakout. Wait for a close back above 53,000 to get bullish, and then the next bullish breakout will be a close back above 60,000. As long as Bitcoin is holding up above 45,000, you can stay bullish. But if we start losing that support at 45,000, the next very critical support level will be down here at 39,000. Below 39,000, we're likely going into a bear market, and above 60,000, we're likely going back into another bull market. Everything in between is just chop with the early warning sign we're going back into a bull market on a breakout above 53K. On Amazon, we were down 0.82% today, and Amazon stock is not choosing to participate in the QQQ's rally. Price action's back below 3,400, and you can clearly see Amazon is in a full bear trend. So clearly Amazon stock is looking very weak here, and it's lagging the rest of the blue chip tech companies. So you can't ignore the fact that it's in a full bear trend with price action breaking through support at 3,400. So don't just get bullish on Amazon just because the NASDAQ 100 is continuing to go higher. Below 3,400, we could be coming back down to 3,311, but the bullish scenario would be forming a higher low and then a breakout back above resistance to form a higher high. If we break down below 3,311, you're looking for support at 3,240 and 3,185, and the bullish breakout will be a close back above 3,445 and then back above 3,500. On Tesla stock, we were up just over 2.5% today, and we're very close to regaining the full bull trend on Tesla. We still have that resistance trend line that we need to break out above right around 1125, and above that we'll still have resistance right around 1145. However, if we get that bullish breakout, it will look like we're going up to close the gap at 1208, and if we can get a price action breakout above 1240, we could see a bull run to the 1400s. Right now, it does look like Tesla stock is regaining control by the bulls, so you will want to stay bullish above $1,000. Below 1,000, we could be coming back down to close the gap at 940, so watch for that breakdown below support to close the gap at 940. If we close the gap at 940, we could still form a higher low and continue to try to break out of the resistance trend line. So right now, watch for that strong resistance trend line breakout at 1125 for the quick gap fill close at 1208. On Apple stock, we were up 2.3% today, and we did get yet another bullish breakout. Price action closed at another new all-time high for Apple stock, which was just above 179.6, and we see Apple closing at 180. Remember, as long as we have the full bull trend in the bullish price action, we don't want to rule out the possibility that Apple is trying to get to my price target at $188. So as long as we're above this critical support level all the way down here at 170, you want to stay bullish. And once we get to that price target at 188, you will want to get a lot more cautious, because once we hit that price target, it is possible that Apple needs to go through a full-blown correction. But right now we're going up on very bullish volume price action and a very strong bull trend, so we never want to try to call the top, and we just want to continue to look for higher prices. You can look for downside support at 180, 176, and that strong support level right around 170 to 172. On the financial sector, we were up just over 1% today, and the price action is back above the 50 EMA. It's still possible we get that bullish breakout and fully close that gap above. The industrial sector was up just over 1% today, and we did get a bullish breakout on the price action, with the price action back above all the moving averages and starting to build up another bull trend. The healthcare sector was up over 1% today, and we still see a very strong bull trend with bullish price action that continues to break out of resistance. On the energy sector, we were up 2.19% today with price action back above all the moving averages, and it does look like the price action is going to attempt this resistance level very soon. So jumping back over to the S&P 500, you can still see this is a very strong bull market, and we now have the full bull trends on all of the daily charts. So with the indices still looking bullish and regaining their daily bull trends, it is possible we complete the Santa Claus Rally and get that low volume melt up, which does mean we could continue to see higher prices. However, we are at a very critical resistance in SPY, so respect this resistance level and don't just assume we have to go higher. There's plenty of people that are getting short squeezed that were betting against this market, and a lot of today's price action could have just been short covering, and we are at a very critical resistance. However, if we look at the stock market as a whole, there is definitely a lot of reasons to stay on the bull, and we're just now starting to see some of the sectors like the financials and industrials starting to look bullish yet again. So don't ever rule out the possibility of how high the stock market can go, and that's why it's a loser's game to try to call a top. People have been trying to call a top this entire year, including the year 2020, and they just continue to get it wrong. You can clearly see the stock market doesn't care what everybody else thinks. It's going to do what it wants to do, and it clearly wants to form new all-time highs. So stay objective and follow price action and trend, and block out all of the noise and unsubscribe from fear-mongering. Fear-mongering is not a trading plan. You need to stay objective, and you need to stay on the bull in a bull market until you lose a critical support or lose the bull trend. Also, don't forget that I do have my own trade alert service called Bank Trade Alerts. That's an algorithm-driven alert service that sends all of your buy and sell alerts directly via email and text message, and only trades the ETF TQQQ. We're currently up over 10.4% in the last 3 months, and we're absolutely crushing this market. If you want to find out more information about Bank Trade Alerts or find out how to subscribe, you can click on the link in the description of the video. I also have the Stocks Channel Discord where I do intraday updates and analysis to help you navigate this market and stay on the right side of the trade. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.